This program is made possible by PSCA, the Plan Sponsor Council of America. For over 60 years, PSCA has served retirement plan sponsors through education, advocacy, and research. Information at psca.org or at 312-419-1863.
Hi, I'm Mark Pierce, an entrepreneur with a passion for working in the healthcare industry. One of my companies, Stonegate Advisors, works with the health insurance carriers that insure many of you to create their health plan offerings. Another, CareExtend, is the first website dedicated solely to providing you products and services to help you save on everyday healthcare, the care that isn't typically covered by traditional health insurance, like dental visits, vision care, fitness and weight loss, even chiropractic care and acupuncture. See, as a child I was born with a heart defect, but thanks to the continued advances in medicine, my heart was successfully repaired at the age of 5. And ever since, I have depended on our healthcare system to maintain all aspects of my health. After all, as a husband and father of 3, my family expects me to be around for a long time to come. So I know just how important good health insurance is. Yet it seems like many Americans are easily lost when it comes to understanding health insurance. Whether choosing a health plan through your employer, looking for an individual or family policy on the newly formed health insurance exchanges, or selecting the right Medicare policy. The cost of health insurance premiums continues to rise, as does the amount you have to pay out of pocket, even if you have health insurance. 10 years ago, the average individual deductible was just under $500. Today it's approaching $1,500. And 10 years ago, the average copay was $10 to $15. Today you'll find copays of $40 to $50, and even more than $200 if you have to go to the ER. And this doesn't even include the amount you have to pay out of pocket for things not covered by health insurance. Did you know an average individual spends $2,300 and a family spends $3,700 a year out of pocket on things not typically covered by core health insurance? Not having health insurance can be detrimental to your finances. Approximately 50% of personal bankruptcies are due to medical expenses, and the uninsured are 3 times more likely to be unable to pay for basic necessities because of their medical bills. And as deductibles continue to increase, even those with health insurance will struggle to pay their medical bills. Medical costs can add up quickly if you don't have health insurance to protect and help you. Having health insurance boosts your personal wealth and financial health, protecting you with lower cost access to medical care and out-of-pocket maximums. So stay tuned to the rest of this episode of Money Sense to learn about the health insurance market today and the important things for you to consider when choosing the best health insurance for you and your family.
Welcome to this episode of Money Sense. I'm your host, Anthony Contrucci. This week we'll be discussing health insurance with 2 gentlemen from the health insurance industry. Matt Glaros is the Chief Strategy Officer of the Myers-Glaros Group, which provides employee benefits, commercial insurance, and personal insurance throughout Northwest Indiana and beyond. Kevin Sliwa is an employee benefits consultant at MJ Insurance and is one of the agency's top performers and trusted leader on the employee benefits team. Matt, Kevin, welcome and thanks for joining us today.
Thanks, Anthony. How are you?
Doing really well. I've been really excited about this episode in particular because, as you know, it's a timely topic, health insurance. So I thought I'd kick it off with Kevin. And what are some of the things that our viewers, myself included, should be considering when we're purchasing health insurance?
Sure. Well, I think it's okay first to just acknowledge that it can be a complicated decision. And even for the so-called experts in the field, there are a lot of questions that we can't even answer. We have to go back and do research when people are asking us questions. So it's okay to just say, I understand that there's some moving parts to this, and I need to kind of slow down to make some of those decisions. And so you can get really caught up in the weeds, I think, sometimes, but what I always recommend is if you can just kind of bring that out to maybe 3 buckets. And those 3 buckets would be access, coverage, and cost. And if you can kind of look at those 3 separately, that will more times than not help you make the right decision when purchasing your health insurance. And so if we were to unpack that in terms of access is going to be like the network. So the providers that would be available if you signed up with a health insurance provider, the doctors that are in that network who agree to the contractual terms for better financing. So you have a claim, you're going to pay less with an in-network provider as opposed to an out-of-network provider, as well as just quality of care and what they agree to with the health insurance company. So the access is the first part. The network is the first part because if you buy a plan but you don't have access to the physicians or the hospitals that you want to access to, it's kind of all for naught. So that's a great place to start to determine, can I seek care at the places I want to? And if I can, within that's probably, I can move on to step 2. And step 2 is coverage. And when you're looking at coverage, there's a lot of nuances within a plan, but I typically try to recommend breaking it down to 4 places: copays, deductibles, coinsurance, and out-of-pocket maximums. So when you're looking at copays, that's just the set dollar amount that you pay for insurance services. So that's going to be associated with things like office visits or prescription drugs. And if you're a frequent user of healthcare services, that's a nice component to have in your plans oftentimes. Your deductible is kind of the dollar amount you're going to pay for inpatient and outpatient services. That works very similar to like homeowners insurance or your car insurance. And so you're going to pay that amount first before any insurance kicks in.
That's out of pocket.
That's out of pocket. So you're going to, so that's, maybe as low as 500 we see, as high as, north of 6,000. And so that's going to be a lot of money out of your pocket potentially. So you're going to want to make a good decision around, can I finance that if I get into my deductible? Again, typically associated with inpatient and outpatient services.
And we've talked about that in Money Sense before when it came to the property and casualty side, about maybe that concept of self-insuring a little bit and kind of managing that risk. So it's not a foreign concept, I think, to our viewers.
Right. It's a pretty typical insurance mechanism. And then your deductible, after your deductible, you're going to get into your coinsurance, where there's some cost sharing between you and the insurance company until you reach your maximum out-of-pocket or out-of-pocket maximum. There's a lot of different ways to look at it, which really is your maximum risk within the health plan. And to me, that's probably the most important component, because typically when we're sitting down with people, they want to know one of 2 things. What's it going to cost me for me to be on this plan? And God forbid something terrible happen to me, what am I going to pay out of my pocket? And so that's a really important mechanism to say, could I handle this? Could I financially, if something catastrophic happened to me?
I think those are great points, and I think there's a lot of great information you shared. And I think for the viewers, and I think for myself, what I really took away was like that there's this process and things you should really be thinking about. So don't get analysis paralysis. Don't get too caught up in maybe in the weeds, but understand this is a process and go through that process and just find the right fit for you. That being said, are there any strategies, maybe Matt or Kevin, any strategy you could think of, and just some tangible takeaways for our viewers of how you can maybe lower the cost of insurance? That's a big topic right now. Is it's getting more and more expensive. People feel, at least.
Sure. Go ahead, Matt.
Well, I think there's a few ways people can look at lowering costs in the marketplace. I mean, of course, you can play with your deductibles and your max amount of pockets. If you're, an employer, you can deal on the wellness side of things. But I think a lot of the cost drivers out there are really going to be potentially offset for individuals by looking at subsidies. I mean, that area right now is becoming a way a lot of people with financial means or without the financial means can access care for a lower amount of money than what they were able to purchase in the past.
Yeah. I think there's a big play, Anthony, as well as with just how healthcare services are being consumed today. So if you really think about it, it's kind of the most insane thing that in this country today as how we consume healthcare services. I mean, what other thing? Think about this. If you were to go buy a car today and you go to the dealership and you go to kind of sign off on the car and they say, great, thanks for purchasing this vehicle. We'll send you the bill in the mail in a month and a half. You have no clue what the cost of that is going to be. That's how our healthcare services work today. You go, you consume these healthcare services, and then a month and a half later, you have your fingers crossed and like, well, I hope this isn't too catastrophic for me. So what we're starting to see is this turn on transparency now, where there is access to information that wasn't available before. A lot of carriers, Anthem, United Healthcare, they have actual tools and resources online where you can actually go and see the cost of those services before partaking in those. And that information wasn't available several years ago. So it's becoming more prevalent.
So really enhancing the transparency. You guys both kind of hit on subsidies. Can you talk about that a little bit? I mean, you mentioned kind of maybe from a socioeconomical standpoint, maybe it's not just for the less fortunate, it sounds like. So what does that actually look like?
Yeah, so the subsidy market, it's significant actually, because what most people don't realize is people from roughly about $12,000 to $15,000 a year of income all the way up to $92,000
for a
a year of income for a household of four could access a subsidy. So if they're eligible to, and there's some requirements that they have to meet in order to do that. But if they are able to access that subsidy, they could get, in some cases, we're seeing plans that are free for people. I mean, free. You don't have to pay any premium. So there's availability. Now, of course, there's restrictions on networks and those sort of things in certain areas of those plans. But overall, there is a way for people, if they're able to access a subsidy, to lower some of their costs.
That's incredible. I think that's a great takeaway. I think if our viewers hear nothing else from today's show, take it away. That's a great one. You mentioned earlier employers, and especially these larger employers, which I think is defined by 50 or more employees, that they feel like maybe given the shifting in this landscape, that maybe they're manipulating the system a little bit, that, are they not hiring the full-time employees? They don't want to breach, I said, 30 hours of work. Can you speak to that a little bit, kind of what you guys are seeing on the ground right now?
Yes, so what we've actually seen is a lot of people were worried employers were going to drop the coverage just altogether. And what we've almost seen is the complete opposite. We've seen employers that were either offering limited benefit plans, enhance their benefits to meet the minimum standards of health care that their government set forward. Or we've also seen employers that were never in the health insurance field actually join it because, one, they don't want to be at risk for a penalty, and as well, they've realized, you know what, we need to get into it now because we're either going to pay money to the government or we're going to give it to our employees. And in the end, the employer wants to help their employees, from what we've seen. I don't know about you.
Consistent with what you're saying?
I think the first thing is when all the legislation came through, it's a lot of panic, and it's just like, okay, hey, let's pump the brakes and really talk about what this means to your business and to your employees. And then when you peel that back and just ask that simple question, well, why do you offer health insurance today? Because there's no penalty to offer health insurance. If you don't offer health insurance today, why are you doing it? And more times than not, it's the things that Matt said. We want to take care of our employees. We want to attract and retain the best people that we can into our business. And so then the question is, well, how has that changed in light of healthcare reform? And typically the answer is it hasn't. And so once you can kind of get to that point, you can have a real discussion like, all right, well, let's figure out how we want to manage this plan going forward in light of you want to continue it. So.
And this wasn't a question I was really going to ask. You mentioned, benefits and about, even, attracting, retaining top talent. Maybe, because I think the term benefits can be a broad kind of umbrella term. What are some of the benefits that, employers today would offer, maybe outside of just, healthcare?
Yeah, so we're seeing an uptick. I mean, of course, you've always had dental and vision insurance, but there's also these new, I guess they're not new plans, but they're becoming more prevalent, like accident plans to help people cover certain parts of their deductibles if a kid falls, or hospitalization. If someone is to go into the hospital, there's a payment that the insurance company, if they've purchased that policy, will give them a set amount of money for different procedures. So there's new benefits that are being offered. A lot of the times it's offered to the employee where they decide if they want to purchase it, not always financed by the employer.
I'm not sure if it was who mentioned it, but I heard something about wellness programs. Can you maybe speak to that real quick? Was it Matt?
Sure, go ahead, Matt.
Okay.
No, all you, man.
Okay. Well, I think the whole idea of wellness is really simple, right? The lowest cost claim is the claim that doesn't happen, right? Great point. And so if you can get out ahead of and prevent some sort of major catastrophic claim in the future, then it's going to lower costs for everyone. And so the idea of these wellness programs is there's groups who, it doesn't matter if you're in a fully insured platform or if you're self-funding your insurance company, your claims dictate your cost. And so how do you get out ahead of a heart attack or a stroke? Or how do you help that smoker who's smoking today stop smoking? The cost of a smoker is $4,200 more on average than a non-smoker. So how do you address these issues that often lead to maybe not immediate increase in cost, but future costs they can continue to compile. And once you kind of have one bad year, it just kind of seems to keep snowballs and it raises costs for everyone in doing that.
Okay. No, that's interesting. So that would include things, again, that you talked about smoking, I'm assuming, diet, working out, gym access, things like that. So that's...
Interestingly enough, on the gym access part, there's a lot of carriers that have been now coupling reimbursements for employees if they go to the gym a certain number of days of the week. So there's ways that you should look with your insurance company to see what options they actually have to help pay for some of those additional wellness services.
One of the more common provisions within with wellness and companies as well is all health plans have to cover preventative care services at 100% going forward. But what we typically see is a very, very small portion of the population still uses those services. So the companies have said, hey, instead of us making it incumbent upon the employee to go out and utilize those services, let's bring those services to them, and that typically includes an on-site screening. So they'll bring a screening company out, you get screened, and you get kind of a snapshot of your health, and that's a good way to figure out is, get out ahead of some of those issues that are maybe creeping up that otherwise people wouldn't know because they wouldn't have gotten screening on their own.
No, that's powerful. To transition a little bit, and that's all I think really valuable, but I'd like to talk a little about the healthcare reform in this country right now. What necessarily has changed in particular? Some key takeaways for our viewers. Talk about maybe Obamacare a little bit, about the ACA. Maybe you can define that for our viewers, what that is. I think topics that where people I think would like some answers, some transparency.
Yeah, so I think the Obamacare and ACA are pretty much the same thing.
Okay.
It just depends on who you're talking to and how they term it. But a lot of the things that people are seeing with Obamacare now is in the past, it was always kind of people's free will if they wanted to purchase insurance or if they didn't. And now, since the passage of the Affordable Care Act, people are now, if they don't purchase insurance, they're actually at a risk for a penalty or a tax at the end of the year. So it's kind of brought forward this light that in order to control healthcare costs, we have to get more people insured. But there's only one way to do that, and that's in a way to mandate it. And that's kind of where the legislation's pushed forward in the last few years, is getting people insured. Now there's just a multitude of options that there weren't there in the past.
I think, can you think of something in the last few years that has been more debated across political lines than healthcare reform? Yeah. Really, no. And the unfortunate part of this is the consumer is right in the middle of that. And it's very difficult to find good, solid information because most of the time it has some sort of political agenda from one side or the other, right? And so it is really hard to dial back and say, what's the truth in all this? And I think what you would see is that when you do kind of strip it all down, the mechanism of the insurance is still the same. I mean, you're still transferring risk from one insurance, from yourself to an insurance company and vice versa. So what the differences are is the types of coverages that are mandated or how things are underwritten, but the mechanism itself is still, nothing has really changed there.
And I think one thing also is everybody says the government's the insurance company. It's not the government's the insurance company. It's actually the insurance company is still the insurance company. The government really is just a financing mechanism that people that do want to access subsidies can go and use in order to pay for the insurance through the insurance company.
So that was one of my questions, actually. So that's perfect. You're going there. And I think to people, there is these myths, these misconceptions, right? And that's what we like to debunk on this show in particular. And again, the government is not the insurance company. So how much say do they have when it comes to, like Obamacare in particular, when it comes to, pre-existing conditions, I think the term you guys use, like previous health conditions? I mean, how involved are they in that process?
So in the past, we used to always be able to limit what people could get if they had previous health conditions. And especially in the individual market, you could be declined. Now, because of the Affordable Care Act, they have to offer you coverage. And there's no pre-existing conditions that can be coupled on to your insurance. So you could have someone that hadn't had coverage, maybe lost their job and had been in a gap. As soon as open enrollment starts, they can enroll for a January 1st start
irregardless
date,
of their
irregardless of their health conditions. Yeah.
So that, I mean, again, what do I know? But that sounds like that could be a benefit to...
It's a benefit. Now the risk is what's the cost down the road for it, but for the benefit, it's there.
So, okay, so speaking of costs, so what you've seen thus far with the implementation of Obamacare, have costs... What has happened with costs? Are they going up, going down, stayed static? I mean, just in general terms, what you're saying.
And as neutral as you can be in this, I would say that the Affordable Care Act is probably a little misleading because it really hasn't made healthcare more affordable. If anything, it's probably elevated the cost specifically to employers who have to pay transitional reinsurance fees, PCORI fees. There's a whole bunch of different fees that they otherwise wouldn't have had to pay. Also, the healthcare reform guidelines have made it so that you have to have certain provisions within your plan covered. So if you're increasing coverage, you're increasing risk to the plan, which increases costs. So there's been, I'd say, advantages definitely from the end user side, but at certainly a cost, a premium cost.
And I think in some of the, I haven't seen the exact numbers yet, but for anyone who renewed under one of the new ACA plans, last year they probably took a huge jump in premium because of the exact reasons Kevin was talking about. This year they're saying the rate increases might be below 10% in the individual market, which in the past has been unheard of, but they're paying a much higher premium than they were 3 years ago. So the pricing, it might have steadied out, but there at some point you had to pay the piper at that point in time.
You mentioned access. There's a couple of different, it seems like to me, a couple of different types of access. There's access like in, I guess, the marketplace or this network. Maybe you can talk a little about that. And maybe couple with that the concept of like network restrictions and access. Like what hospitals? So kind of on both fronts, does that make sense? Maybe you guys can both try to tackle that a little bit?
I guess on the network restriction side of things. Today, in today's marketplace, not 2015 because there'll be some changes, but in today's marketplace, if you're in Indiana and you purchase a coverage from any of the insurers, there's going to be restrictions on where you can go. And in a lot of cases, you can't leave the borders of Indiana. You have to stay within them. That will change in 2015. There's some new carriers that have national coverage, but most people are unaware of that when they purchase health insurance. They think if they buy the brand name that all of a sudden they're going to have this national plan. And the way the plan was designed in Indiana was to keep people within Indiana on the individual side, not on the employer side.
Yeah. Yeah, I think that's going to be a big shock for a lot of people, is this narrow network, right? I signed up for Anthem. Anthem has great coverage. I can go to any doctor, and then when they sign up for the plan, they see really how narrow that is. Community health providers, is for that network. And I think that that's going to broaden. The access is going to broaden, as Matt mentioned. As more players get into the game, I think you're going to see that. But definitely for 2014, I think there was a lot of carriers who are just kind of feeling it out and saying, what kind of participation are we going to have in here? How much risk are we going to see? And I think it's actually run a little bit better than they thought it was going to.
How does one going into it, when they're on these exchanges or in this marketplace, know what plan's right for them? You talk about that process. So what would that process, again, as succinctly as possible, if I'm someone that has no foundation knowledge on this subject matter, how do I kind of determine those 3 key things you mentioned in the beginning of the show?
Well, if the website works for healthcare.gov, a lot of people wonder if they have to go to healthcare.gov to register.
Right.
And only if you're trying to access a subsidy do you need to do that. And at that point in time, you really have 3 options. You can go it alone and just do it yourself, which I'm sure we've all heard the phone calls and the messes. That's probably not the easiest method.
So that's interesting. I'll apologize. So unless you need a subsidy, you do not need to utilize the healthcare.gov.
Correct.
Yeah.
Interesting.
Yeah.
Okay.
The other option is navigators. We've heard a lot about navigators in the last few years. And navigators, interestingly enough, can lead you through registering on healthcare.gov, but when it comes to the decision-making process of what plan fits your family's needs, they can't help you with it. And then the last line, of course, is an agent or a broker that you can purchase through. So there's a few different areas that you can go. All of them have their benefits, I guess. I would stay away probably from going it alone, though. It's a relatively risky area.
One of the things I think that specifically healthcare.gov has tried to do to make this cumbersome process and making a decision is limit it to specific type plans. So theoretically, there should be 4 plan options: platinum, gold, silver, bronze. In the state of Indiana, through Anthem, right now there's only 3 options. It's gold, silver, and bronze. So it does kind of limit you're not going to see 100 different plans to choose from. They do really try to make it a little bit easier for you, and there could be nuances within those, even a silver plan or a bronze plan or a gold plan. But again, a lot of changes and some new carriers coming into the marketplace. So what was for 2014 might not necessarily be the same as in 2015.
Okay. So. Well, we have a couple minutes left, and this has been excellent. Any final advice, maybe in 60 seconds each, for our viewers today, and as they're trying to navigate these waters for the first time, maybe in some cases?
I don't know if I need 60 seconds exactly to say it, but I would say probably the most important part, and what I tell anybody that we talk to, is you need to find someone that you trust to go through this with. Now, if that's whoever it could be, your Aunt Martha who's been in insurance for years, or just someone that understands how the market is. Because like we were saying, there's a lot of nuances that have changed what it's looked like in the last few years. So finding that person that kind of help you through it is probably the safest thing for someone to really try to access it to.
And my advice is always to everyone, buy the least amount of insurance as you can.
Okay.
And I think a lot of people go into this and they're trying to kill an ant with a nuclear warhead, and you don't need to do that. And it's, do I want to take more risk on, or do I want to transfer that risk? And just really spend some time thinking about, what is my healthcare snapshot on it? What is my expected snapshot? And make a decision off that, but also, if worst case scenario, if something happens, am I going to be financially okay? Can I accept this financially? And I think if you can take that under the don't buy as much, don't buy the most, but what's the least amount that I can buy? I think that's going to give you the right state of mind to make a decision there.
And really focus. What I've kind of heard is like on the catastrophic sometimes, especially I guess if you're younger. Is that accurate?
Absolutely.
So again, so explain for our viewers what that would look like if you're just focusing on a catastrophic claim.
So a catastrophic claim is really just going to be, you're going to purchase a plan that has an extremely high deductible, traditionally no office visit copays, no prescription copays, and you're going to self-finance $5,000–6,000 of risk, but your premium will be significantly less.
And really quickly, because we've talked a lot about finding that trusted advisor to navigate you through this process. What are some things that maybe our viewers should be looking at when if they're doing to work with a broker? How do you find the right broker for you? Is that?
That's, I think the key probably is there, just building a relationship with them. And if it's a phone call, a meeting in person, if someone's not willing to meet you in person, I probably wouldn't go that route. I think that's kind of a key, is having someone that you can relate to and talk with on a regular basis.
That decision to me is really no different than how do you find your tax advisor, how do you find your financial advisor, what are the things, and really there's just this trust and that they're operating under their best intentions for you and what's best for you. So.
Wonderful. Well, no, that was great. Thank you guys so very much for your time today. I really enjoyed this, and I learned a lot, I know, myself. So thank you.
Thank you.
And thank you for joining us today. I hope you learned as much as I have. We look forward to seeing you next time for a new episode of Money Sense. I'm your host, Anthony Contrucci, and remember, I always try to make finance fun.
This program is made possible by PSCA, the Plan Sponsor Council of America. For over 60 years, PSCA has served retirement plan sponsors through education, advocacy, and research. Information at psca.org or at 312-419-1863. This program was produced by Lakeshore Public Media and Centier Bank.